What's going on, guys? Welcome back to today's mentorship video. Today we're going to be going over premium versus discount. As always, we have DMP alongside us, helping us.
Yo, what's up, guys?
So let's just jump right into it. So I kind of want to show you guys how to formulate premium versus discount. So we can see that we swept out all this liquidity right here, all these stacked highs, these relative equal highs, and we're sitting on the 4 hour right here. I want to show you a higher time frame example of premium versus discount. So we swept out this internal range liquidity right here. We have this fair value gap that we're kind of delivering from. We have this massive wicks. We see that we swept out all this liquidity, so we can kind of expect us to retrace from this point in time. So we always want to start from the bottom and go to the top of the range. So this would be the range that we currently put in. Now double click into your settings, and I like to add these settings right here. So the 0.5, the 0.618, and then the 0.79 settings. The tool is on the second level right here, the first tool right here, and then once you have it set up, it should look exactly like this. So now on the higher time frame, we want to see us retrace into discount of the range. So I'll label it right here. So this is a premium of the range, and this is discount. If we're buying and we see that we're in an uptrend right here, we want to be buying in discount, and if we're shorting, right, we want to be shorting in a premium. So if we're bullish on this leg, we want to see us now revisit equilibrium, or if we're bearish, now we can use this as a target, so we can target and formulate a bearish bias going into equilibrium. And we can see that we instantly tapped equilibrium right here at the 6 o'clock open on one of these days, and from there have completely been running from that point. So premium versus discount is super important, and it's also used for, it's basically just equilibrium of the range. Price is doing one of the four things always. It's either generating liquidity, hunting liquidity, rebalancing to inefficiencies, or rebalancing to equilibrium of the range. So kind of just formulating, where price is going to go from after sweeping out all these highs inside of this fair value gap. We kind of want to see it come and tap equilibrium of this range to then, make the next leg up and continue higher, because price just can't, run continuously all the way high. Like we make stacked highs. So, as price goes up, we kind of go in this direction, make higher highs and higher lows. So, we're not completely just going in a linear direction. It's, staircasing up. And on these staircases, we're usually revisiting equilibrium of this range. So, this is coming into equilibrium. This right here coming into equilibrium, and this 0.618 area is pretty sensitive as well. And I'm just drawing, random lines, and it's lining up perfectly. But this is kind of exactly how, price action would move as well.
Yeah.
So yeah, this is a pretty quick one. We could show you a lower time frame one. So this was actually price action from today. Let me just mark out 9:30. So we had 9:30 open right here, and we put in a initial swing high right here and an initial swing low. We swept out this internal range liquidity right here, so I'll label this as a sweep. And then we put in this range right here. So from the high to the low, we want to be measuring this out. We can see that we came into a discount of this range and then came back into a premium, and then have been just completely selling off. So just measuring our ranges is super important, just for understanding, where we are in price. Remember, we always want to be shorting in a premium and buying in a discount. I think that's it. This was going to be a short one. DMP, if you want to add, do you have anything to add?
No, it's pretty quick, pretty simple. I mean, you're just looking at ranges. So, like Jan said, ideally, you're wanting to pretty much buy below, the point 0.5 level, and then you want to sell above the point 0.5 level. Of course, you want to align your confluences and, market structure with that. But yeah, typically you'll see that when you take, a short, you'll see that you typically short it out of a premium. And then, on your long setups, you'll see that, you ended up longing out of a discount, naturally. So as long as you're taking solid entries, you're going to, be on the right side of, what we call equilibrium, I guess. So, yeah, pretty simple, not really a crazy concept. Should be one that's pretty straightforward. And yeah, it's just basically retraces in price in terms of ranges. Expecting where you expect price to react from, where you expect price to go when we're at the top of a range, bottom, things like that. So yeah, pretty simple.
Yeah. All right, guys. So yeah, we're gonna leave you with that. This was a quick one, and we'll see you guys in the next video for Bad Eye Fujis. All right,
Yep.
guys. Peace out.
Later.